Hi, today I'm going to investigate the Russian investing landscape. I'm going to look at some of the big companies in the country and try to work out why they're all at such attractive prices. So if you do enjoy this video, please hit the like button so I can get some feedback. Otherwise, I have no idea if this is even an interesting topic or not. And if you are new to my channel, well, welcome. My videos are about investments that anyone in the world can make. And I'm trying to help as many people as possible understand what it is they're actually investing in, especially on the stock market, because people spend far much more time researching their next computer or their next phone than they do their next investment. Now, I've built a reasonable sized portfolio myself, and I'm aiming to grow it at 20% per year. I base a lot of my knowledge on the great investors, Peter Lynch, Warren Buffett, Charlie Munger, Mohnish Pabrai, and a handful of others. Now, I'm not perfect at this. Not every investment that I make is going to be a home run. But we definitely will find some great investments and we'll try to get that 20% goal. Now, in this video, I'm going to go through the reasons why the Russian market is so cheap and then some of the best companies that I'm familiar with. Now, you might be thinking, why Russia? Well, I actually lived in St. Petersburg for 6 months and I have some Russian friends interested in investing. Привет, мои друзья, это видео для вас. Я надеюсь, вам понравится. Now, I'm only just getting my head around the culture and the business world there. I think it could be an interesting place to find a bargain because very few people are looking in this place. You know the saying, fish where no one else is fishing? Okay, now there is a lot going on here and I will 100% not cover everything. But here are some of the big points. Since 2014, the US and the European Union have imposed some of the strictest economic sanctions on Russian companies in modern history. Russia's debt to GDP ratio is just around 20%. So for example, Brazil, well, it's close to 80%, and China, well, its total corporate household and government debt has risen to 303% of GDP. Russia's RTS index in 2019 was the best performing stock market globally with 37% returns in US dollar terms. Now that's ahead of the second best performer of Greece of 34.5%. Russian equities have an average dividend yield of 5.6% on the RTS index and a PE of just 7. Now, comparing those numbers to US equities, which are at pretty much all-time record highs, and the S&P 500 index now trading at a PE of 32 and the dividend yield of just 1.5% in comparison to those big Russian numbers. This is the RTS index statistics. This is like the Dow Jones of Russia. It's a representation of all of the companies. So the first thing we should notice is the very attractive PE and price to book value numbers, which are general valuation metrics. The next thing to look at is that the market is mostly made up of commodity companies, things like oil and gas, metals, and other mining. It is more than half of the market. Now that is a big difference to the US, which has less than 10% in these same industries. So the reasons are complicated and are difficult to understand, but here is my best attempt. Again, I'm going to definitely miss things here, but this is what I know so far. Politics. Well, President Putin and the Russian government don't play by the same rules as the West. It is way too complicated for me to understand exactly what is going on behind the Kremlin walls. Investors from all over the world find it difficult to invest in a country where they just don't understand the politics, and I think that's fair. Now, because of the political issues, sanctions are put on Russian industry, and this hurts the growth potential of Russian companies. Growth potential is limited. Because of the sanctions with a lot of the Western world, Russian businesses will find it difficult to grow their businesses outside of the Russian borders and their protections. Now, Russia is a big country with a lot of people, so the addressable market is still very big. Inefficient businesses. Even if the sanctions were lifted, I don't see many of the Russian companies being able to expand seriously outside of Russia. Let me tell you a story about Gazprom, one of the giant government-controlled companies. Now, Gazprom is a gas company distributing gas all over the country and even into China. Now, thanks to Sven Carlin for this map. Here is a link to his video on Gazprom as well. Now, Gazprom had an option to build a pipeline into Western China, which is option 1 here on this map. This option was going to cost about $10 billion. Still a big project. Now, this was the most efficient option, but instead, Gazprom decided to go with option 2, even though it was a lot further and would cost a lot more. Now, Gazprom makes a lot of money, and since they have good friends running the pipeline construction company, they were happy to pay the extra $50 billion so their friend could get a bigger contract. Totally inefficient, but that is Russia for you. So for these reasons, that is why I think the companies must be cheaper anyway than other similar companies in the world. But how cheap is too cheap and that we're really going to be getting an amazing deal. So let's go through some of the big companies in Russia and do a quick analysis to see if there's anything interesting here. So I'm just going to do a high-level look over these companies. This is not my normal analysis. I'm just scanning to see if I should dive deeper. Okay, we're going to look at Gazprom first, and they're the biggest gas company in the world. If you add up all of the world's reserves, Gazprom has more than all of the world combined. They are just gigantic. Now, the business is influenced by global gas prices. So this is a commodity business, and it's a very important commodity that will be used for decades to come. I've got the government ownership percentage here, their debt levels, their expected growth rates, their return on invested capital at only 4%. Now, return on invested capital, ROIC, is how much the company turns its profit into more profit year after year. It's very important because we want compounding investments. They are a massive company, and the market historically prices this company at a big discount to its book value and a big discount to the money it makes. I think gas is an interesting industry and something that will continue to be important for the future. Now, the growth rates are only high in the short term as the company has been hammered in 2020. So just returning to normal is 20% per annum for the next 5 years. Now, I actually think the company is ultra safe since the government owns a big piece of it and gas is so important to the country. And considering the company doesn't have a lot of long-term growth ahead, I think the dividend is better back in my pocket than being reinvested into the inefficient company. Now, I want 20% returns compounding for the long term. So with the return on invested capital only at 4%, I'm not going to get that with this investment. I also think the intrinsic value is a bit difficult to calculate as gas prices fluctuate all the time, so free cash flow just won't be consistent. Now we're going to take a look at Yandex, and they're the biggest tech company in Russia, the Google of the Russian world. Yandex has the major search engine, ride-sharing app partnering with Uber, and many AI projects. Now I like this company a lot. They don't pay a dividend like all the other Russian companies because they are not owned by the government. They do need to compete against Google in search, but Yandex is doing a great job at growing their other areas of the business for the Russian-speaking world. The company would warrant more research, except I can tell you now that they are really overvalued. I ran the numbers through my intrinsic value calculator, and I think an optimistic price with a margin of safety similar to Google is about 1,000 rubles per share. But the current price is about 5,000 rubles per share. So I think a really good company with lots of growth to come in the future, but it's just priced way too high. Yes, it's probably the best company in Russia, but I'm not going to be paying 5 times higher than my buy price. Google is too expensive for me at the moment, and it's only about 2.5 times my buy price. Okay, the next company is called Norilsk Nickel, and they're a nickel, copper, and other rare metal mining company. They operate throughout the world, not only just Russia, and the business is influenced by global metal prices. Okay, now this is a commodity business, and they have a range of very important commodities that will be used for decades to come. Now, I don't understand nickel mining companies a whole lot, but I think this one does require more research. If you are also interested, we need to see whether the debt can be managed as it is high, but most mining companies run at a high debt rates anyway, and that doesn't mean I will accept it. I just want to understand the risks more and probably will want a bigger margin of safety when I look at the buy price. But I do love that high consistent return on invested capital. That is important for compounding our investment and something that attracts me to research it more. Okay, so on the surface, I think a really good company with a lot of growth to come in the future, but I have no idea about the price. I need to look into the company a lot more and work this out. Plus, I don't even understand the business fully yet, but it is definitely an interesting find with that high ROIC. Now, if anyone has investigated this company before, it might be fun to discuss it, so please leave me a comment. Now, the longer term growth rates are actually going to be really strong for this company, I think, because, well, even though their prices are going to fluctuate based on the metal prices, but in the long term, batteries need these metals, and the rise of electric cars is going to play perfectly into this company. Now we're looking at Lukoil, and they're a giant oil and gas company more focused on the oil side of the business. They're actually similar to Shell, where they also have retail outlets as well as producing the oil. Now, the business is influenced by global oil prices, so this is a commodity business in a flat and declining industry. Like most of the oil companies throughout the world, this sector has been beaten down this year. Now, that high dividend that you see is mostly likely unsustainable, so please don't chase the dividend. Now, although at a discount to book value and at a decent PE ratio as well, there might be something here. I haven't worked out exactly how to value this oil company, so I would need to dive deeper into valuing it, but there is probably some value here considering all oil companies throughout the world have had a tough period. So a solid company due for better trading conditions. I don't like the long-term prospects of the industry, so I probably can take a pass here, but I want to find out how much of a bargain we're actually getting. Again, if anyone has investigated this company before, it might be fun to discuss it, so please leave a comment. And last today is Sberbank, and they're the biggest bank in Russia with about 30% market share. This is the dominant force in banking in Russia. Look, it's as safe as it gets and has been around since 1841 and now stretches into 18 countries. Now, with that 53% government ownership, this company, I swear, is as safe as it gets. It's also quite a well-run company with solid financial history and a reasonable trust amongst the Russian people. Look, I talked to my Russian friends about each company today and they think, well, all these companies are pretty safe. Now, regarding the price, it is not a bargain. So I'm not that interested personally, but if you wanted to play the Russian market, this is the safest place to invest by far. Now, I also know what my friend said is very anecdotal, but I think it's good to get a bit of feedback from local people who actually use the banks. So I think a solid company, also with solid growth to come in the future. I think it is about fair value right now, so it would be better to get a bigger margin of safety. Based on my very initial calculations, I think I would want a price to book below about a 0.8, which would mean about a 20% price fall from where it is now. So somewhere around 180 rubles per share would give me some margin, probably not enough though. Now, I don't like dividends, but this is quite a good stock if I was 80 years old and looking for some spending money. I could give the shares to my grandchildren and just live off the dividend. But right now, I don't need that. Many of these Russian companies have big dividends, but I want to remind everyone that dividends suck, and it's for these reasons. If the company has a solid return on invested capital, taking a dividend hurts your long-term compounding dramatically. But if the company has a bad ROIC, well, a dividend is still bad because the government takes their share in tax. What we should always prefer is the company to not pay a dividend and have a great return on invested capital. Sometimes companies do pay a little dividend, and this is often just to keep shareholders happy. There is only really one situation where dividends are okay, and that is when the company has a bad ROIC. But then again, if it has a bad ROIC, well, it's not really a great long-term investment. So dividends are the worst. Now, I've made an entire video explaining why dividends suck in a previous video just recently, but I'm not going to disregard companies with dividends because they're at least trying to do what shareholders want. But as smart shareholders, we want high ROIC and no dividend. The dividend should be the last option. And out of the companies that we looked at today, Yandex is the only one doing this at the moment, and Norilsk Nickel at least has great return on invested capital to go with their relatively small dividend. Yandex, unfortunately, is just too expensive, so Norilsk Nickel is the only company that I can see at the moment that I am interested from today's research. But I think something that would be really interesting to do is start looking into smaller sized Russian companies. I bet there are some serious mispriced stocks out there in the Russian small cap world. Probably in the too hard basket for me at the moment, but it is a very interesting idea. Look, thank you for staying to the end of this video. Let me know what you think of my Russian analysis. I'm interested to hear opinions. Please hit subscribe so you don't miss any of my future videos, and увидимся в следующий раз.